Hello and welcome to this training webinar on inventory transactions inside SAP Business One. My name is Captain Solanki, and for the next 45 minutes or so, we'll run through what is available within that inventory transactions section of the inventory module. So we're basically going to be covering the following transactions and what the application of these transactions is and how they can be used. So we'll go straight into the system. So I've got SAP Business One. I'm running version 10, feature pack 21.11, which is the latest. And as I said before, we're basically focusing on this section here, which is under inventory and inventory transactions. And basically, these transactions are relating to adjusting inventory within the internal system. So these are not transactions relating to sales or purchasing. They're basically adjustments or movements internal to the organization as opposed to inventory transactions dealing with external parties. So to start with, we'll look at these two transactions here, which are the goods issue and the goods receipt. These are essentially used for ad hoc adjustments of inventory. So when it comes to goods receipts, you generally do this if you found some additional stock that hadn't been accounted for, or you've been given some free stock and you wanted to just update the inventory value. That's what you'd use the goods receipt for. And likewise, the goods issue would be for writing off inventory as an ad hoc adjustment. It could be because you had some breakage, or you've given away some samples as a freebie, and so on. So let's have a look at these. So to start with, let's look at the goods receipt transaction. Note you can copy from a goods issue. So if you've done a previous goods issue, you can bring that up and convert it into a goods receipt, and in a sense, just reversing the impact of the goods issue that you had previously done. I mean, this is a new feature. This wasn't there in previous versions. I think certainly not there in version 9.3, but in one of the patches or feature packs of version 10, this feature was introduced. So if I go and pick, my printer here, now I'm doing a goods receipt. I can specify the quantity I'm receiving. I can specify the warehouse. I can also specify the cost. So, there's a price list up here. By default, it's picking up the last purchase price. You can also pick a different price list, or you can just type in the price that you want to bring the inventory in at. And then there's the offset account. Now, this is coming from the GL determination setup on the item master, whether you set up by warehouse or by item group, or you've got advanced GL determination. Either way, it's the inventory offset account that's defined for this particular item that gets picked by default. Now, you can, of course, change this if you wanted to use a different account. So in this case, it's defaulting to the stock difference gains. You can select a different account if applicable, but typically we'd leave it as the stock difference gains account. Okay, so basically what will happen is if I post this transaction, it will increase that inventory quantity by 12. And if you look at the journal entry that's going to be posted as a result, you'll see that it's going to credit that gains account and debit the inventory account. So let's post that. And that then if we go back and look at the item master, you'll see that the quantity has been increased by 12. Now we obviously didn't see this before, but you can even go in and look at the inventory posting list, and you'll see in that transaction that I've just posted is now showing up, and it's affected the quantity on hand there. Okay, so there's the 12. Okay, so that's the goods receipt. Let's do the goods issue now. So on the goods issue, it's the same process. You go pick the item you're adjusting. You specify the quantity that's being adjusted. And what will happen in this case is you do have the ability to specify a price, but because you're adjusting the inventory of an item that's already in stock, the price is just an info price. It doesn't really impact the value at which the goods issue happens. The goods issue will always happen at whatever cost method is defined for this item. In my case, this item is defined as moving average costing. So regardless of what price I put here, I could even go and make that 0. It doesn't matter. In the background, when it posts, it will always post with whatever the average, or in this case, my item's average costing. So it'll post with the average cost of those quantities. And once again, the GL account is defined here. But let's say if you were, handing these 2 items off to someone as samples, you could go in and select the samples account, and then the journal entry would go in against the samples account. So it's a credit on the inventory and a debit on the actual expense account that you've defined, and then you add it. Now with goods issues, so we could see that on a receipt you could copy from an issue. On an issue, you can go and copy it to a receipt. So if I made a mistake and I want to reverse the impact of this goods issue, I just go in and say copy to a goods receipt, and then basically it's the same thing is going on, and you'll see you obviously still need to put a price in, whatever cost you want this stock to go in at, but there will then be a relationship between the goods issue and the goods receipt. Okay, so let's move on to the next item on the list here, which is the inventory transfer request and the inventory transfers. So what are these used for? An inventory transfer request is generally used for moving stock between warehouses. So, if you've got multiple locations and you want to have one location putting a request onto another location, you put a transfer request in, and then the transfer request gets converted into a transfer. Now, if you're moving stock within a warehouse and you've got bin management turned on, then you can use inventory transfers to move stock from one bin to another as well. So let's have a look at the transfer request transactions. So you've got the from warehouse and the to warehouse. So let's say I'm going to go from 01 to 02. And once again, I'll pick the item that I'm moving, and I can also then specify the quantity that I'm moving. So I'm moving 4 units from warehouse 01 to 02. Now, as this is a transfer request, what this will do is firstly, it'll create a commitment on the source warehouse, and it will create an ordered quantity on the destination warehouse. So let's see that. Once I add the request, and if I come back and look at my transfer request, I can see there's that 4 ordered, and the committed quantity on the warehouse 01 has gone up by 4 as well. Now you can just print this out, you can give this to the warehouse and they can pick it and ship it, or you can also generate a pick slip. Now you can generate the pick slip a couple of different ways. You could just go right click and say generate a pick slip, And if there's sufficient stock in the system available to be released, it will create a pick list. Let's do that. And there is the pick list that was created based on the quantities. And then you can go in and then, specify how many were picked. And then you convert that into a inventory transfer. Okay, so when you do that, that then opens up the same, it's the same as doing a copy to inventory transfer, but we're going through that sort of intermediate step. We didn't need to do that pick and pack step. We could have just gone straight into the transfer request and do a copy to inventory transfer. And that would have, achieved the same thing as well. But either way is possible. Now, with transfer requests, the system also maintains back orders. So, if you are, I've completed that transfer request, and you'll see that, the original request is now closed. But if I did another one, and let's pick the same item, and let's do quantity of 4 again. And whoops, I need to change the to warehouse. And I'm at that. So if I then did a partial delivery, so I go copy to inventory transfer, and let's say I only ended up shipping 3, which I can do. If I then come back and look at my original request, you'll see there's an open quantity of 1. And then if I do a second transfer, it'll only do that balance quantity for me. As I said earlier, you can also generate your transfer requests directly from, you can also generate your pick slips via the pick and pack manager. So let's have a look at how that works. So we'll do another 5 from 01 to 02. And we add that. Now, what we have is in the pick and pack production manager, let's pick inventory transfer requests. And let's have a look. And that's the transfer that we just entered. And then I can generate a pick slip. So I mean, if I've got many different transfers going across different warehouses, I can use this to release those transfers in a orderly fashion, including doing different filters, based on warehouses and things like that. Okay, so the last thing is if you are doing bin-to-bin transfers, you can go in and select a warehouse which is bin managed. All right, so I'm doing my bin managed warehouse is warehouse 05, and I'm transferring. And so now I can say I'm transferring 5. It's got the from bin location, and I've probably got some setup that's defaulting the from warehouse, but this is showing all the different locations where the stock is. So I could say I'm moving 2 from there and 3 from there. And then I can also then define the to location. So where is the stock ending up? And let's say it's ending up there. So this allows me to then move stock from one bin to another. And then we're done. Okay, so we'll move on now to looking at the inventory counting and posting transactions. So that's what you use for performing your stock takes, right? So it's a 2-step process. So the first step is to create the count sheets. And then once you've done the counting, updated the details, you then convert that into a posting. You can certainly go straight into a posting, and if you were sort of doing ad hoc adjustments on inventory, which are plus or minus, you could just come straight into here and achieve the same thing you would be able to achieve using goods issues and goods receipts. All right, so let's have a look at the count transaction. So start by the count date and the time. So this is important because when you create the count transaction, it will take the inventory's position at that given date and time, right? So if you change this date, the in-warehouse quantity on count date will update. Now, you also have the ability to define whether there's one person counting or multiple people counting, and we'll have a look at that in a bit. But firstly, let's just have a look at how a single count would work. So in here, you can go in and then you can either type in the items that you're counting. And then select some. And there's the warehouse that you're counting against. So that's one way of putting the items into the count sheet. Now, you can, of course, do an Excel copy paste into the grid as well. So if you had some sort of a listing from somewhere, you could just paste that information straight into the count sheet. You could also add the items. And there's a couple of options around that. So you can import items, and when you're importing items, you can then define the different columns in your source data, and then you can select the file from which you want to import the data. So inventory, here we go. So we got stock take no bins. So I've got a file here for stock take with bins and another one for stock take with no bins. Let's just quickly look at what the files look like. So the one with bins has got the item code, the warehouse, the quantity, and the bins, which is basically the data we were seeing on screen here. Okay, item code, warehouse code, quantity, and bins, and it needs to be a tab delimited file. So if I was doing a count with bins, I could just import that, and you see that that's loaded the data in. Now, what's quite useful about importing the data is when you're importing, you also have the option to define serial numbers or batch numbers in the file. So what that means is if you've done a count and if you found some serials and batches, those are also considered in the count. And then when you're doing the variances, it already pre-selects which batches or serials were counted and which batches or serials that exist in the system and need to be written off. So that just gives you a lot more flexibility when it comes to counting batches and serials. And so that's one way of adding. And you can see it's already put in the counted quantity, and it's showing you the variances as well. Now, what you can also do is add items and select items via a criteria. So when you do that, you can then select a warehouse. You can also then do a filter based on bin locations if you wanted to. And you can even say exclude items where there is no stock. So if I just went in and I wanted to load up everything that's in warehouse 05 and in which bins, if I just did OK on there, basically I've got everything loaded up by bin location. And this is just a count sheet now, and then I can of course print that count sheet. So probably done quite a few things on here. So I'm just going to close this and reopen it. So go back to the count sheet. So if you just go back to the fact that we're doing a single count, and let's say we're counting these two items. And if I wanted to then just add that in as a count, once I've done that, I can then also print out a count sheet. And when I'm printing, it's also asking me whether I want to show what's in stock or hide what's in stock in the printout. So if I say hide, it'll then print or preview the count sheet without the in-stock quantities. Right, so all I get is this count sheet, and then the person just comes in and scribbles on what they counted. Once they've counted it, they come back in here and put the quantities in. So let's say I counted 1010 on that item, and I counted 1100 on that item. And you'll see that on the first item, there's a variance of 5. On the second item, there's a variance of 100. The second line is showing up in red, and the reason is there's a setting under modules, administration, system initialization, document settings. And in here under inventory counting, you've got the ability to define which rows should be highlighted. When the variance is greater than a certain percentage, that's when we want to highlight the rows. So that's why we've got the second line with a red, and the first line doesn't show a red. We can also freeze the quantity. So if we've printed a count sheet, and let's say I'm counting these two items, I can say, well, I'm going to freeze this. And what will happen then is the system will not allow me to perform any inventory related transactions that change the stock for these two items. Right, so that's an option to sort of then prevent the stock from moving, because once you've prepared the count sheet, you really want to finish the counting as quickly as possible, because the stock is constantly moving, new stocks coming in, you're dispatching orders, and if the counter is sort of counted the items after some additional movements have happened, you'll find that your variances may not be as accurate as you want them to be. So once you've done the counting and updated those, and if you're happy with the variances, if you're not happy with the variances, okay, you can send the person back out, say, go recount this, and maybe I go recount this and I find I've got 1195 rather than 1100. So the variance is a bit better now. I'm happy with that. And then if that's okay, then you convert that into an inventory posting. So when you get into the posting screen, in here, you're seeing the same information, what was counted, what the variances are. You can see for positive variances where you found more stock, you can go put the unit cost in. For negative variances, you cannot, because the stock's exiting the system. It'll be whatever the cost is. You can, for positive variances, select a particular price list. Generally the item cost makes the most sense, but if you do have a different price list you want to use, you can certainly go off and do that as well. So let's pick the item cost. You've got the offset accounts. You can also specify those, and then you add the posting. And as soon as you've committed this, the inventory gets updated. So the count transaction doesn't update the inventory. Once you've done the posting, the stock quantities in the system get updated. So earlier I also mentioned that if you were going to directly do an inventory posting for some form of an adjustment that you're doing, you could do that. So you could just come in here, pick the 2 items, and then say, I've got a variance of, I broke 3 of these, so I just go -3, and then the system works out the rest. And I found 5 of these, and I just go +5. So it's a quick way of doing an adjustment, either negative or positive. So it is an option if you did want to do quick adjustments. So back onto accounting transactions. So the one that we just completed, now you'll see that the status is closed because it's been finished. I can go start another one. And let's have a look at what happens when you say I've got multiple counters. Okay, so when you select multiple counters, then you got some additional options. So you can say number of individual counters. So, maybe there's more than one. So maybe it's Jason and Alex and Bill. All 3 of them are counting. Okay, so we've got a count with 3 people, 3 counters. Let's select those couple of items again. And now what we have is each one of those people can, do their counting, and we can come back and update what each one has counted. So I might have Jason counting 1,000, Alex counting 1,100, and Bill counting 1,050. Right, so 3 different people with 3 different counts, and you can see that the maximum difference between the counters is 100, and the max variance is 90. And that you may think is, a bit too much, and you may, then, and let's say on the next item, all of them are counting, let's say 1193, 1194, and 1195. So now in this case, the counters have a difference of 2, and the max variance is just -2. And that may be acceptable. You may not want to ask people to recount that one, but the first line, you may get someone to go off and recount it. So they go and recount, and then they find, okay, it was actually 1010, and it was actually 1005. And maybe at that point you're happy with that variance, and you may accept that as the count. And so what happens then is when you convert this count to a posting, you've got a few options. You can say, well, I'm just going to use what Jason's counted. I'm going to use what Alex counted. There's also an option here to say items with no counter differences. Well, that means all 3 people counted the same thing, even though there's a variance to what was counted. But we're happy that 3 people have confirmed the count. Otherwise, I can go say, well, let's just go with Jason, and that then pulls through Jason's counts, and we can then post those variances in. So that's doing counting with individuals. What you can, as I said, there's a third option where you can also say there's a team of people counting. So what happens then is if you say there's a team counting, you define who the people are in the team. And so let's say it's Alex and Jace and Bill are the 2 people that are counting. And then you end up with this second tab where you can define the counts by the team members. And so when you have a team count, it means that the sum of the team's count is what goes in as the total. So if I come here and let's say, so we've had a total of 1,000. Let's say Alex counted 501 and Bill counted 502. So total they counted is 1003. And likewise on the second item, let's say they counted 600 and 500. Got a total of 1100. So when you come back to the contents tab, you'll see the team counted total. Let's just add that. And then when you're copying to the posting, you can note I also had an individual counter. I could get rid of that. So it's only team counting. There aren't any individual people counting. Or I could have a team and individual counting separately as well. But in any case, once we've done this, we can then copy the team counted quantity and accept that as the variances for. All right, what happened here? We have this. So we can then convert that team count into the inventory posting. So there's a few different options in terms of your counts and how to load them up. Let's just finalize this. Note one of the things is that if you have an open count in play for a item warehouse combination, then you cannot create a second count sheet for that same combination. The system will block you from doing it because, how can you have two counts happening at the same time for the same item and warehouse? So just finally, if you were importing counts, and let's say this is to do with bins as well. It's a stock take with bins, and we import that. Once you've imported that, you can see the variances. So you can see that, there's 48, we counted 50, there was 60, we counted 60. And when we copy to the posting, then, it will only copy those items that have a variance. If you don't have a variance, then it's not going to get copied across. And then we add, and what it's asking me is now is if you've got in the count sheet, if you've got any items that don't have a variance, you're happy to close them off because you're converting the rest anyway. And if I say yes, then it's posted the variances and the count sheet becomes fully closed, even though the second line had no variances to convert across. Okay, that kind of covers the counting. Let's now look at cycle count recommendations. So that kind of feeds into the counting. It's set up to warn you when you need to count certain items. So let's just have a look at that. So firstly, on the item master itself, you can define by item, by warehouse, a cycle count code and a person who may need to be alerted when that count needs to be done. Now, these cycle codes are definable by you. So if you look here in my system, I've got a cycle count called M1, which is basically saying, I want to count this item monthly on the first day of the month, right? Every month on the first day. I've got another one that says M20, so every month on the 20th, and repeat every month. So you've got a few options here. You can do daily, weekly, monthly, annually. And so you define, different count cycles. So items that, let's say, are fast movers, you may count, I don't know, weekly. Items that are slow movers, you may count only twice a year, or you may say high value items need to be counted daily, and so on. So you can come up with your own count strategies. These counts can be imported into the system, so you can import the cycle counting setup via DTW. But once you've defined your cycle counts, what will also happen is if you've defined a particular person to be alerted, then that person will get an alert in the messages and alerts, and it'll show them certain items need to be counted. Okay, so you get a pop-up saying these items require counting. Then you can go into the inventory counting directly from there and do what you need to do to load them up. The other thing you can do, which is very, very handy, is you could go into the cycle count recommendations, and you can run this report. And then from here, it'll show the items that still need to be counted. And what you can then do is once you've counted something, you can mark it as counted so that it doesn't appear in the report. And until you've not counted it, it will continually appear here. So I can go in and say, do a count on this, and it just loads it up here. I could go in and say, actually, it's been counted. So let's see what the impact of that is. So if I look at that item had a next count date of today. And if I go in and mark it as counted, it disappears off the list. If I then come back into my item master and was A003, you'll see that because I marked it as counted, it's ticked over, and now the next count date is in a month's time, because that's what the definition of my cycle code was. So this is basically the cycle count recommendations is a way of reminding you to count items based on the cycle codes you defined on the items yourself. Okay, so then on to the final topic, which is inventory revaluation. So this is the transaction that allows you to change the cost of an item. Okay, so just a reminder, in SAP Business One, items can have different costing methods, and the costing methods that are available are moving average, standard cost, first in, first out, or batch or serial costing. Okay, so let's have a look at how each one of those operates. So the first one we'll look at is moving average costing. So that item there, moving average, and it's got a moving average cost of $306.87. I, for whatever reason, want to revalue this up or down. You generally would not, you would less frequently do a revaluation of a moving average item because, moving average item, costing will change as you receive new stock. But if for whatever reason you needed to do it, maybe you've damaged something and you need to write down the value, you can go and do it. So let's say I'm going to change this from $306 to $301. So that's, you could do that. Alternatively, you can also do an inventory debit credit. And in that case, what happens is you can say, writing down the value, and I want to reduce the value of this stock by $1,000, right? So in this case, it'll just apportion the $1,000 across the existing stock and reduce the value of the overall stock by 1,000. But it depends on what why are you performing this? You'll use one or the other. Price change is a lot easier to view. You can see exactly what you're doing and what the new cost will be. So that's moving average. If you were doing a revaluation of a standard costed item, it's pretty straightforward as well. It's the same process. Now, just bear in mind that a standard cost item, the only way you can change its cost is through revaluation. The cost will never change because you've received the stock at a higher value, because it'll just go into a purchase price variance. But you can go in and say, well, actually, my freight costs have increased, and cost of cartage and insurance, whatever else, has gone up, so I'm going to change this to $13 now. So that's on standard cost. The third type, as we said, was first in, first out. So let's have a look at that. So I've got a item here. Right, this item's costing method is first in, first out. Now, it's a bit different here. I can't just go in and type a new cost on the top grid. In the bottom area, I can see the FIFO layers, right? So it's listing the layers from the oldest, from the oldest to the newest. And I can then go in and select a layer and set the new cost for that layer. And so there's a quantity against that layer, and it's only those quantities that get revalued. You can of course revalue multiple layers if need be. Okay, so that's how FIFO revaluation works. And then the final one is your batch or serial number based items. So with those ones, what will happen is, similarly, you'll get a list of, in my case, I'm looking at serial numbers, so it's all quantities of one. You can see all the serial number layers, and then from there you can select the specific one that you want to revalue. So let's say I want to revalue the first one. $630 is too low. It's actually $700. Okay, so this is how you can do revaluations for the different types of valuation methods, and then you add the revaluation. Once you've added it, if you then come back and look at the journal, it'll either be a gain or loss depending on whether you're increasing or decreasing the cost of the item. Okay, that concludes the presentation. So yeah, if you do need more information, or you want to, get some additional training, or interested in other solutions, please contact your account manager.